Dollar stumbles as markets reconsider hobby fee path. London. The US greenback slipped on Friday and became heading for its first weekly decline this month as buyers dialed down bets on in which interest costs may also peak and taken forward their views at the timing of fee cuts to counter a likely recession. A great thing this week has been the fall in oil and commodity prices, which has eased inflation fears and allowed fairness markets to rebound. This has eroded the safe haven bid that has been boosting the dollar towards different main currencies. The dollar, up around 9% this year, has misplaced some of its shine, seeing that traders started betting the Federal Reserve may want to sluggish the rate tightening tempo following any other 75 basis point increase in July. They now see costs peaking next March around 3.5% and falling by means of almost 20 bits per second via July 2023. This rate hike repricing dispatched 10-year Treasury yields to 2-week lows, while the greenback index has lost 0.4% this week. For now, even though Fed Chair Jerome Powell pressured the primary bank's unconditional dedication to taming inflation. Fed Governor Michelle Bowman too supported 50 bits per second hikes for the following couple of conferences after July. Analysts noted also that terminal rate repricing changed into occurring throughout the evolved world as recession fears grow. The repricing within the market has held the dollar back, but an offsetting force is the hazard of a global downturn. The Fed is pretty a lot on autopilot. Until they take their foot off the brakes, dollar weakness can be constrained, BMO capital markets strategist Stephen Gallo mentioned. Rate hikes are being taken out of the euro and sterling markets too, he referred to. The yen, touchy to adjustments in U.S. yields, was flat round 135 in step with greenback but seeking to snap a 3-week dropping streak at some point, of which it tumbled to successive 24-year lows past 136. If U.S. Treasury yields have peaked, so has dollar, yen. If you integrate higher Japanese GDP boom and a peak in U.S. yields, it is a benign surroundings for yen energy, mentioned Mizuho senior economist Colin Asher, who expects yen around 130 via year-end. The euro likewise changed into flat, seeding a small in advance upward thrust. It fell 0.4% on Thursday, following weaker than expected PMI figures for June and Germany's choice to cause the alarm stage of its emergency fuel plan. The dollar's slide boosted even commodity-focused currencies consisting of the Australian dollar and Norwegian crown. The Aussie ticked up 0.12% to $0.6903, though it remained on track for a third immediately weekly decline. The Norwegian crown, fresh off Thursday's 50 bits per second price hike, became up 0.5% at 9.92, often in advance session excessive around 9.88. It additionally rose 0.5% towards the euro. The Swiss franc touched the highest in view that early March in opposition to the euro at 1.0055, growing 0.5% at the day.